The Dow is down almost 500 points right now. And just FYI, right? Last night I got Louise and I subscribed to the Aden Forecast. Pamela and Marianne Aden have been on our program many times over the years. They do an investment newsletter, and Louise and I have followed their advice for, at least a decade, probably two, or at least 1.5. And in their newsletter, they said a couple of things that I thought were pretty startling. They said, number one, global debt has never been this big. It's 40% greater. Global debt right now is 40% greater than in 2008. And global default rates are higher than in 2008. And interest rates have never been this low going back to the beginning of recorded history 5,000 years ago. Now, this is the point I made in my book, The Crash of 2016, is basically they're trying to hold this thing up with baling wire and bubble gum and low interest rates and pumping money in. They say this is the main reason why we continue to recommend keeping the biggest chunk of your total portfolio in cash in U.S. dollars for the time being. They further note in this month's January 2016 issue of the Aden Forecast, ADEN Forecast, George Soros is calling for a sequel to the 2008 crisis, and this is not out of the question. That's especially true considering the emerging market situation, skyrocketing student loans, and the disaster in the energy sector thanks to the plunging oil price. The Baltic Dry Shipping Index. Now, this is the measurement of all the stuff that's being shipped by sea. Okay. And it's a really, really good measurement of worldwide economic activity. And when it goes down, that means that you are in or about to be in a recession or depression. The Baltic Dry Shipping Index, the Aden sisters wrote, has been hitting record lows. Railroad cargo in the U.S. is also way down. And they say that we feel that if the economy slows down to dangerous levels, the Fed will probably step up to the plate again. And then in a part called the perfect storm, they say the bottom line is the stock market has clearly turned bearish. The Dow Transportation is showing a scary story. They said this is a huge deal. It's telling us that a major trend reversal is currently in process, similar to the ones that happened in the late 90s and in 2007. Those were both major drops in the stock market. And as in those previous cases, the transports, this is the Dow Transports, declined from near the top of the trading channel down to near the bottom side, dropping 46% and 59% respectively. If this pattern repeats, and the leading indicator is telling us that it probably will, then the transports could eventually fall to the 2007 peak area or possibly down to near the 4,000 level. That would be a 22 to 41% drop from current levels and would indeed suggest that a 2008 repeat is in the making. That is, this bear could get really ugly. Plus, the Russell 2000 and the New York Stock Exchange, the NYSE, are currently signaling the same thing. They point out this started last August, and they say stocks don't drop like this for no reason. Remember, they look ahead and they lead. And whatever lies ahead, they don't like what they're seeing. So stay on the sidelines. This is a high-risk bear market, and until that changes, it's important to stay out of it. Now, that's from the investment newsletter, the Aden Forecast. This is from the Financial Times. The news mine, I subscribe to the Financial Times, so I get these two emails every Friday. One is the summary of the Lex column, which is my favorite part of the Financial Times, and the other is Martin Wolf. Well, it's called the news mine. It's the top stories of the week. And by the way, this is not the Financial Times is not advertising with us, so this is just I just find it useful. Anyhow, Martin Wolf on market conditions, January 12th. According to Robert Shiller's cyclically adjusted price-earnings ratio, the U.S. market has been significantly more highly valued than it is at present only during the disastrous bubbles that burst in 1929 and 2000. Professor Shiller's well-known measure of market value is not perfect, but it is a warning that stock market valuations are already generous and that a continued bull market might be dangerous. Global investors withdrew about $52 billion from emerging market equity and bond funds in the third quarter of 2015. This is the largest quarterly outflow on record. And then they continue to go through, on credit conditions of indebted companies, on fourth quarter performance of the Wall Street banks, on debt levels in emerging markets, on technology in India. It's just point after point after point. It's all pretty much the same thing. And then in the Best of Lex newsletter, and this is my favorite stuff. This is they say he starts out by saying, if you made the questionable decision to earn your MBA or CFA. A book that he's recommending, Benoit Mandelbrot's The Misbehavior of Markets, is a good one. And he talks about how stocks demonstrate momentum until they don't. This is a quote from the piece. The basic pattern of all markets, seen at any scale from the intraday to the multi-year, is periods of identifiable trend, that would be up or down, right, over time, broken by sharp periods of volatility, after which a new trend takes hold. Once this fractal picture of market dynamics takes hold, one sees it everywhere. We have undoubtedly entered one of these liminal periods of volatility that separate long-standing trends. The long bull market is over. That does not mean, however, it will not be followed by yet another bull market. Lex has no idea how one would know what the next trend will be, except to say that current high valuations of stocks and bonds make high future returns a bit less likely. So, and then they go through a whole bunch of things. So anyway, bottom line, there's something scary this way comes with regard to the economy. Now, political question, is that going to help Republicans or Democrats? Is it going to help Bernie or Hillary? Is it going to hurt everybody? I mean, it's just not a good thing for the United States in general, but anyhow.
To watch more clips from our programs, hit the Watch More Videos button over here. And please be sure to hit the handy-dandy subscribe button so you'll always be up to date. Tag, you're it.